Welcome to today's market report.
European stocks ended a touch lower on Thursday as hawkish signals from the US Federal Reserve raised concerns over early policy tightening, with mining stocks falling the most as commodity prices tumbled. The Pan-European Stock 600 index was down 0.1% at 459.33, snapping a 9-day gaining streak after the Fed said it could begin raising interest rates a year earlier than expected. Mining stocks were the worst performers, sinking 2.5% as the US central bank's comments lifted the dollar and dented commodity prices. Utility and chemical shares were also among the biggest declines. Losses in major mining stocks saw the FTSE 100 shed 0.4%. Germany stocks were mixed after the close on Thursday, as gains in the insurance, retail and pharmaceuticals and healthcare sectors led shares higher, while losses in utilities, chemicals and telecom sectors led shares lower. The DAX rose 0.11%, while the MDAX index fell 0.03% and the Tech DAX index climbed 0.26%. France stocks were higher after the close on Thursday, as gains in the foods and drugs, gas and water and general financial sectors led shares higher. The CAC 40 gained 0.21% to hit a new 5-year high, while the SBF 120 index gained 0.11%. US stocks are seeing opening lower on Thursday after the Federal Reserve took a hawkish turn, forecasting interest rates increases as early as 2023. The Dow Jones was down 0.3%, S&P 500 traded 0.3% lower, Nasdaq dropped 0.4%. The Federal Reserve's two-day policy meeting concluded on Wednesday with the central bank raising its growth and inflation forecasts, starting a discussion about when to start tapering its bond buying, as well as pointing to 2 rate hikes of 25 basis points in 2023, a year earlier than expected. With many governors lifting dots for 2023 and some also for 2022, tapering in late 2021 becomes much more likely, according to Nordea, which also made for a hawkish read-through in sharp contrast to the response to the latest couple of surprisingly high inflation reports. The main Wall Street indices are more than 30% higher over the last year, near record levels, helped in no small part by the fiscal and monetary largesse of the US authorities. This assistance, at least from the Fed, may be coming to an end sooner than expected. For this to happen, the labour market has to continue to improve, which tees up the release of weekly US jobless claims numbers. This is expected to show the number of individuals who filed for unemployment insurance for the first time falling to 359,000 for the week ending 5th of June, the fewest since the pandemic began. Crude oil prices edged lower on Thursday with a stronger dollar in the wake of the Fed meeting. US crude was down 0.4% at $71.9 per barrel. Brent was down 0.4% at $74.08 per barrel. Gold futures fell 4.7% at $1,773.85 per ounce. On the FX front, GBP/USD is currently trading at 139.24 and down around 0.4% in the New York session, attempting to correct the steep bearish decline. Cable has traded between a high of 140.08 and a low of 138.95 on the day so far, reeling in the wake of US dollar strength. GBP took back a little ground versus the G10s earlier in the week on the release of the stronger than expected UK Consumer Price Index data, with sufficient strength in the release to spark a little more interest in the Bank of England's next policy meeting on 24th of June. However, that was before the Federal Reserve came along and took the markets by surprise with a hawkish hold. The hawkish tone from yesterday's meeting and dot plot that now shows a faster than expected pace of tightening weighed on risk sentiment and sent US yields and the greenback higher. After a brief consolidation pause, the Eurodollar resumed the downside and broke under 119, falling to 118.90, the fresh 2-month low. Dollar index was up 0.8% at 91.935. Dollar yen traded as high as 110.81. Critical resistance comes at 110.96.
This is today's market news. Thanks for listening. We'll see you next time.